Hello everyone, this is Mayank and welcome back to my channel. So today in this video we'll discuss about Indian footwear sector. We'll discuss in detail about the size of the sector, how it is comprised of. We'll bifurcate into multiple kind of footwears and then we'll discuss the analysis on each kind of bifurcation in this sector, and then we'll pick one stock which cater to one particular sector. We'll discuss about the stock, the numbers, and then we'll see some key strength of it, and then I'll give my thought on the weakness part of that stock also. So we'll discuss everything in detail in this particular video. So this video might get a little longer, but still I request you to watch the video till the end so that you get the entire picture regarding sector specific, then stock specific, then the kind of market it plays around, and based on that you can decide whether this is a good fundamental stock for you or not, or whether can you invest this stock for longer term or not. Saying that this video is completely on fundamental analysis, there is no swing trading discussion on this particular video. This video is made only if you are interested in this stock for investing around 4 to 5 years or at least minimum 5 years. So that is something kind of analysis. Now again, this is not a recommendation, this is my personal research and opinion, and I'm not invested in this stock yet, but I am trying to understand more on this particular stock. So you can decide whether it fits your risk portfolio or your portfolio as such, and then based on that you can decide whether to invest in this stock or not. We'll start the discussion now, saying that this video was supposed to come yesterday, but because I couldn't complete the entire editing part or entire recording part rather, I'll say, so that it got delayed, and today it's publishing today. But why it got delayed? Because I had a ticket booked for Kantara movie. Now I am saying that because if you are the one who have not watched this movie, please go ahead and watch. This is amazingly made, very creatively and very well honestly made movie. Okay, I'm not a movie reviewer, but still this is something which I would recommend to everyone to watch, no matter which the language is. The crux of the movie remains the same, and this is a must watch for you, so please go ahead and watch it. Coming back to a stock analysis part, so we'll see this. So this, if you see CAGR of financial 21 to financial 25 estimated, Indian economy can grow in a range of 6.5%. Now this number is not very strict number. Sorry, some economists are saying it can go up to 11%, some are saying it is 7%, some are saying it can go up to only 4%, but a major consensus comes around 6.5% growth. So for the sake of this video, we'll keep a context of 6.5% growth rate of Indian economy over the period of financial 21 to financial year 25 estimated. Now Indian economy is divided into multiple sectors. Today we'll talk about retail sector. Footwear is a part of retail sector. So if you see how the retail sector is placed, retail sector is divided into footwear, apparel, accessories. So footwear can grow up in a range of 21.6% CAGR. Apparel accessories can grow in a range of 22.2% CAGR. Jewelry and watches can grow at a range of 20.9% CAGR, where home and living grow up to 20.3% CAGR. Consumer electronics grow up to 15.9% CAGR, pharmacy wellness 10.7% CAGR, food and groceries 5.6% CAGR. If you see examples of some stocks in this sector, footwear we have Bata, we have Liberty, we have Campus Active. This kind of companies, Relaxo works in footwear. Apparel accessories, we have Trend, we have Alta Birla Fashion Accessories, we have Vaibhav Global. So these companies deal in the apparel accessories. You see jewelry, watches, Titan and Rajesh Export are the prime example. Home and living, if you see, then we have Sera, we have AGL. So these companies are in the home and living. Consumer electronics, if you see, we have V-Guard, we have Whirlpool, we have Voltas. This company in the consumer electronics. If you take out pharmacy wellness, we have Cipla, we have Panacea. Companies like this, we have this API manufacturing companies, Granules, IOLCP. Then if you see food and grocery, so for food and grocery, we have companies like Reliance Retail, which is part of Reliance now. Reliance Retail is not listed, it's unlisted company. Then we have DMart, then we have Tasty Bites. These kind of companies are there in the overall spread across multiple spectrum of the retail sector. Overall, if you see, retail growth can be around 9.5% CAGR. Okay, so overall retail will grow in the speed of 9.5 CAGR, but individual they are different rates, out of which the biggest growings are apparels and accessories and footwears, with their quite neck to neck kind of growth. So today we'll discuss about footwear. So if you go dig down deeper and see how footwear sector is placed, so footwear sector, if you see, they are broadly divided into 4 categories. S&M is sports and athleisure, casual, formals and outdoor. We can dig down deeper and divide it further into male, female, open loop, closed loop. But on broader basis, these are the 4 categories which every company is trying to target on their own, basically their business model. And if you see the graph, out of which 12% was the market share of SNA in the case of 2015, increased to 15% in 2020, by 19% in 2021, and by 2025 estimated that it will take a market share of 21%. Again, this is 21% only, but I personally think the way SNA works, SNA can go up to 25% market share. Now, In the case of SNA market share, how much is the branded SNA? So branded SNA is 48% of the entire market share. In 15, it is 2020 it is 54%. 2021 it was 56%, and 2025 they are saying it can go up to 60% market share. So branded segment will consider 60% market share of the entire SNA market share. Other things, if you see in the graph wise, so if you see this red is the highlighted by SNA, whereas orange highlighted by casuals, and formals are blue, and outdoor is only green. So you can see orange is also increasing and this red is also increasing. So why this red is increasing? Because SNA market share. And why this yellow is increasing? Because people are becoming more and more jobs are coming. So if you go to job, normally you wear formals. So these two categories are growing very fast, formals and SNA. Today in this video we'll discuss about a company which belongs to SNA, sports and athleisure segment. But why this growth? So we need to see, we have seen the growth. As per the data is saying that by financial year 25 estimated the entire projected size of SNA will become $11.7 billion, around 88,000 crores. It will be around in that value, 88,000, 90,000 crores, keeping the current dollar rate. So this is what will become in financial 25. And what? Not the entire sector. It's only about SNA sector. But why this SNA sector is growing so fast, or why it's predicting that it will grow so fast? There must be some key growth drivers. So these are the key drivers for the growth of this sector. Growing proclivity towards sports and physical activities. So people are running more, people are going to gym more and more compared to 5 years back. People are more trekking, hiking, traveling. So these kind of things giving a push to this particular sector of the footwear. Improving health awareness. Same thing, people have become more health aware. If they're not running, they're jogging. If they're not jogging, they're still walking. A lot of tracks have come up. Some turf football grounds have come up. Turf cricket grounds have come up. So many things have come up for people's convenience of doing workouts or being health aware or being fit. So this entire thing is giving direct push to the sports and athleisure segment. Next, if you see ability of homegrown brands to address the underserved demand. So if I ask you 2 years back, if you have to remember any brand which is majorly into sports, you will probably say Reebok, Puma, Adidas, Nike, that kind of brand. There was not a single homegrown brand which was there in our mind. But right now, some companies are trying to capture that market share from bigger brands and become a household name or become a brand name in this particular segment of footwear, or rather I'll say sports and athleisure segment of footwear. Where the country will shift from unorganized to organized sector. Now, when Indian economy will grow, the per capita income will grow. When per capita income will grow, the product becomes more affordable to people. So people, when things become more affordable, people move from unorganized to organized sector. People who will shop in the footpath, they will move to smaller shops. People who shop in a smaller shop, they will move to bigger shops, and similarly they will start taking next step towards branded products. So this is one reason why this shift from unorganized sector to organized sector. Next, if it's a steady premiumization of the market, same thing, the more you earn, the better product you buy, and per capita income increase gives a more shift to the market to premium products. So these are the few reasons why I personally see this sector is going to grow. I'll repeat, people have become more aware of physical health, fitness, physical awareness. The local brands are getting more and more visibility. People are shifting to more premium products and more organized or branded products rather. What is the company discussing today? Company is Campus Activewear Limited. Okay, so Campus Activewear Limited operates in the SNS segment of the market, sports and athleisure segment of the market. During my school days, if I remember associate campus brand, then probably I'd see only school shoes and some low price or economically priced sports shoes and or school shoes. So these two segments only I could imagine myself with campus brand, associate myself with campus brand 10 years back or when I was in school and everything, right? But now this company is changing the game. They are trying to move up the ladder and become a better premium product or a mid premium product. We'll see that in details also. But SNA, if you divide, they are divided into 4 price segments basically. First is price segment which is lesser than 1000, then which is between 1000 and 1500, then which is between 1500 and 3000, then which is between or more than 3001 rupees, which is premium segment. So there are 4 segments how this entire sector is divided. How campus is placed, this is very detailed, so watch it carefully. So there on the right hand side is there financial 19 and what is the financial 22, which is covered by highlight this thing. Okay. On the left hand side, if you see, this is the market share on each price category. So 48% market is covered by entry level shoes or sandals or footwear rather I'll say. 16% is covered by semi premium, 24% is covered by premium, and 13% is covered by premium plus segment. Okay, so this is how the pyramid is placed. So if I see here, or if you see here, entry segment has 4 products in India. 4 companies work in the entry segment: Liberty, Bata, Relaxo, and the Campus. If you move to same premium, then Bata, Campus, and Liberty. If you see premium category, then Reebok, Puma, and Liberty. And if you move into premium plus category, Nike, Puma, Adidas, and this brand called Skechers also, which works in this particular segment. If you see closely here, Campus is present almost in the 3 of the pyramids, or rather I'll say almost they complete entire third of the pyramids. So they say they have more than 85% of product, like 85% of the segment, entire segment is covered with their products. So they have basically 1 or 2 products in each of the segment at least. So lower, I'll say entry level, mid, semi premium, mid premium, or premium, they have product in all these categories. So they say 85%. If you see on the right hand side closely, the market share, the product share of this particular brand Campus has reduced from 47.6% to 35.6% in the entry level category. But in the mid premium or semi premium, they increased from 21.1% to 23.4%, minor increase. But if you see in the premium category, they increased from 31.3% to 41%, that almost 10% jump. So they are trying to shift their products from entry category to premium category. And why they are doing this? Because when you shift product from entry to premium, your average selling price increases, and when average selling price increases, your margin increase. And also when you are dealing in the premium category, then you make a brand. Dealing in the entry category, you will never be able to make a brand, very rarely, or it takes a lot of effort to create a brand in the entry level segment, because you can't spend on marketing, you can't spend on sales streams, because your margin is very less, you cannot play around. But in the premium segment, since the margin is more, you have more game in your hand where you can play around the marketing, around the sales channels, around the branding, around the billboard activities, and all those things you can do when you are in the premium category, because your margins are higher. So Campus has placed a strategy where they're shifting the product slowly and steadily to premium category, and this reflects on the average selling price also. Now few points we see about Campus. Campus is the number 1 sports and athleisure brand from India. Okay, they have 20,000 plus retailers across 650 plus cities and 28 states. They have more than 17% market share in branded SNA footwear market. 37.4% the revenue contribution from direct to consumer channel. This is very important. We'll discuss this also going further down the slide, why this is so important. Then you have said they have a capacity of 28.5 million, out of which they manufactured 22.5 million pairs in only last 12 months. Now, then if you see revenue from operations, these are numbers. Q1 financial 23, they had around 337 crores. Then if you see trailing 12 month, they have 13,965 crores. And then if you see financial 20, they have 1141.8 million rupees, what they are saying here, right? EBITDA, if you see Q1 FY23, they have around 18.4%. Trailing 12 months, they have 20.8%, and FY22, they have 20.4%. Profit after tax, they have financial 21-23, Q1, they have 8.5%. Trailing 12 months, financial 23, they have 10.8%, and financial year 22, they have 10.4%, which is a good number. It's not a bad number. Probably will not get a clear picture of from here. We'll move to next slide. We'll get a very clarity on it, how it works. So here, if you see, you have Q1 financial 20 to Q1 financial year 23, and if you see, there's a good graph from Q1 to Q2 financial 22 increase, then Q3 is increase. Similar pattern is in EBITDA also. Q2 is more than Q1, Q3 is more than Q2, but Q4 starts decreasing. Similarly, see in profit after tax also. Q2 is better than Q1, Q3 is better than Q2, and Q4 reduces, and that further reduces to Q1. Why? Because the brand or the product which Campus deals with has a seasonality. Seasonality means they operate more on the closed loop kind of footwear. So basically shoes and all, right? So closed loop footwear doesn't sell very good in the summers. They sell very good in the winters and also in the festive season. So Q2, Q3, these are festive seasons as well as winter seasons, right? So people buy a lot of shoes. So thereby their sales increase more in Q2 and Q3 corresponding to Q4 and Q1. Okay, and even if you see Q1 financial 23 sales is very high compared to Q1 financial 22. One reason I see personally, I'm not very excited about it, because Q1 was a lockdown period, second COVID wave. So this jump is more than 100%, 150% roughly, but you cannot say that this is something which should consider, because this was a COVID period. Maybe Q1 FY24 will give us a more clear picture how much they've increased year on year. Quarter on quarter, yes, they are doing good. But year on year, how they're performing, this is something we need to wait and watch, because COVID and non-COVID period cannot be compared. Okay. But anyways, if you leave that factor apart, Q3, they have given tremendous growth. Okay, and now we are in Q3, Q2 just got over. and we are in the quarter 3 right now. So this, so result of this previous quarter 2, something we need to watch out for. And quarter 3 also, you can expect that if quarter 2 went well, quarter 3 can be much better to them, because winter has come, it's already started to come, and then we will have festive seasons and everything already started. So sales will be higher in the number side. Then if you move further, net debt they have reduced from 1.7 to debt by equity, debt by EBITDA basic 1.7% to 0.4% from 19 to last quarter. Okay, and then return equity they increased from 21.3% to 38.2% over the same period of time. ROC they increased from 21.9% 37.4% over the same period of time. So everything is on a positive side. ROE is increased, ROC is increased, net debt by EBITDA has decreased. So basically this company is going in the right direction if you see from this numbers perspective. Then if you talk about numbers game, then revenue from operation has increased 30% CAGR. So that's a tremendous increase if you see from overall, and this is not because of COVID, non-COVID, this is compared to pre-COVID. So FY19 is pre-COVID era, but if you see trailing 12 month, they have 13,965.9 CR, or like 9 million of sales, right? So even compared to pre-COVID period, this is a very good growth. So that's why this is important, because they have grown in a CAGR 30%. Volume sold also they have sold more, 20.6% CAGR they have sold. Then average selling price is 7.8% increase. This is very important, because average selling price I told you, the moment your ASP increases, that means you are targeting a premium set of customers. One prime example of ASP compared to that is ARP what they said, average revenue per user in telecom. So that is also something which, the more you ARPU is more, the better the company is. So that's why people say the ARPU of Airtel is much more, little more than Jio, or some quarter ARPU of Jio is better than Airtel. So ARPU, similar to that, ASP is very important in retail sector, because we target the premium set of customers, and thereby your margin expands. So CAGR 7.8% where in the ASP. I personally think the way companies promoting itself from entry level category to premium level category, this CAGR can be faster if they go in the direction what they want. Now we'll see this thing. So this I talk about how this D2C impact, right? So we'll see this here. Campus Activewear Limited, if you see CAGR growth is 30% overall. This is overall growth of the company. But there are two ways this company sells. One is trade distribution channel. Another is D2C, direct to consumer channel. What is trade distribution channel? Trade distribution is the traditional way of selling. From manufacturer it comes to national wholesaler or dealer or distributor, sorry, and from distributor it will come to state level distributor. From there it will come to wholesaler, from wholesaler it will come to retailer. So there are multiple people involved in the entire value chain, and everybody takes a cut in the product. So if the company sells for 100 rupees, the manufacturing 100 rupees, by the time it reaches the customer it becomes 200 rupees. So but the company doesn't get 100 rupees, it gets distributed among the people, different people involved in the value chain. The growth for this company in this particular channel is only 14.5% CAGR, which is not bad in terms of growth. But if you compare it to the D2C growth has been tremendous, 129.7%. So this company is focusing a lot on the D2C segment. So D2C growth is basically in two ways. One is through online and one is through offline. How offline works? Offline is they establish their EBOs, exclusive brand outlets. Okay, so basically they will set up. You might have seen in bigger cities, even in tier 3 cities also, Levi's store. EBOs, exclusive brand outlet stores. Okay, not multi-brand showrooms. Okay, I'm talking about exclusive brand outlets. Levi's, Adidas, Puma. So these are exclusive brand outlets. Similarly, Campus is also trying to create exclusive brand outlets. What happens there? The company directly sell the product through the exclusive brand outlets. They cut down all the middlemen in the middle, like in the value chain. So the margin increases. Even they sell a little bit lesser price also, the margin increases because of direct to consumer, and same goes for online also. So if a company price product is 1000 rupees, for example, and they sell it through maybe the traditional channel, their margin will be lesser. But if the cost is 1000 and if they sell on the Flipkart for 2000 rupees, even after paying some discount, even after paying some commissions to Flipkart, their margin will be much higher because of direct connection to customer, direct selling directly to customer. And this is why this D2C becomes a very important part for any company. If you just for information, Marico, HUL, all are trying to acquire D2C businesses. They've acquired also few in the past, all the D2C businesses, because D2C gives them a higher margin, and also D2C gives them a direct customer data. So data is very, very important. When you buy from Flipkart, you know what product you bought, what kind of sizes you bought and everything, and they know your email ID, they know your phone number. So data also they get when they do D2C sales. So this focus of the company on the D2C sales gives them an edge over their competition, because previously they don't have the data of customer data, customer preference, all things they don't have. but right now they can contact customers directly or indirectly and get all this data through different channels, and then they can change the design and everything based on that data. So D2C helps them in many ways. Data gathering, then they have a design, then they get direct more margin also. And the growth what this company is doing, 129.7% D2C, that's a tremendous growth, and this gives a lot of positive side for this company. So this is how this entire sales is differentiated. Now this is a very important figure what this company has told. So this is how China was there 15 years back when it comes to S&A sector. So you see 15 years back in 2015, China had a sales of $3.1 billion, where India in 2020 had 2020 it was around $2.6 billion. So if you see where India was 2 years back, or if you see right now it's around $3 billion right now. So where India is now, right? So it was China in the same point in 2005. So in span of 15 years, China it has grown by 15 times. It has become around $48 billion. But India's growth can be faster than China because the economy of India is growing very very fast. And even if we keep a conservative figure, in India growth is the rate of China, then 15 years down the line, India's growth of S&A sector will be 15x from now. So by the year 2035, Indian S&A sector can be worth more than $48 billion or roughly $50 billion. So this is the what growth they are projecting, and as a proof of concept they are given comparison with China, which is not very wrong because India is also becoming a China plus one strategy. A lot of manufacturing is going to happen in India. A lot of companies are starting manufacturing in India. So India is going in the right direction of becoming a manufacturing hub from a service hub. Okay, so this comparison is not wrong. I don't find it wrong. So if this comes true to its numbers, then there is a 15% growth directly in terms of market share also. So when a market increases, the people who are in that market for a longer time, who has a brand already, they will get the major chunk of the revenue. Okay, so campus is trying to play that game where they want to create a brand, move from entry level to premium level, where whenever this market share expands, they get a major chunk of that. Okay, so this is very important to note. Then we talk about key strength and weaknesses. So we have seen the sector. Okay, we have seen how the sector is played out, how the sector is divided into multiple categories, how each category is placed out, why S&A sector is very important, the growth of it. And then we talk about this company stock, right? We saw their numbers, we saw the growth, we saw their sales channels, we saw what the maximum contribution for the sales channel. Then we saw what the company is trying to do. Okay, we have seen all these things. And now if you liked it so far, do like the video. Like this will help me to reach out to more and more people. It will encourage me also to make more video in this format. Okay, now we'll talk about the strength and weakness, or I'll not say weakness, risk of this stock. Okay, so first strength is optimum capacity utilization. So as I told you previous slides, out of 28 million pairs, they produce 22.5 million pairs. So the capacity is 28 million. So there's around roughly 80-85% capacity what they are doing, 80% capacity utilization. So this is a very good capacity utilization for a company of this size. Then they have vertical integration. So vertical integration means the shoe are divided in two parts. If you see upper part and lower part, out of which 16.7% upper manufacturing they do themselves. 37.5% of shoe soles, that is lower part, they do themselves. When it comes to assembly, 100% assembly this company does in-house. So that means they are trying to create a particular vertical integration, whereas 37.5% and 16.7% number will also increase going down the line. So eventually this company will become fully vertically integrated company where they don't have to depend on anything or anyone for any completion of the product, like complete the entire product. So they will do upper manufacturing themselves, shoe sole they will manufacture themselves, assembly also they will do themselves. So this is a complete integrated company it will become. Right now they are in the process, but slowly steadily they will become a complete integrated company, and this will give them a very big edge compared to their competitors in the market. Then we'll see manufacturing lead time is 60 to 90 days. You see market standard is 90 to 120 days. They have 60 to 90 days. This means when the design is finalized, from the time to design finalized to time to get the market. So basically time to market is 60 to 90 days only. So within a span of 3 months, they can launch a product from design phase to a manufacture to the right hands of the customer basically. So this is what they are saying. 60 to 90 days is the lead time, whereas industry specific is up to 120 days. Some more strength if you see, they have higher replenishment cycle. How it is works, because since the lead time is less, they can change the designs very fast, or they can replenish the higher selling designs very fast. So if you see other companies, they can higher selling designs, they can put a new stock for that in 120 days, but this company can do in 90 days. Okay, so this is how it has an edge over the market. If you see growing margin sales medium, we discussed before, D2C sales is increasing very fast, and that is good for the company because they increase the margin. they increase the ASP, and then this will give this company a big branding value also when it becomes D2C. So they have two D2C offline, EBO, exclusive branded outlets, D2C online, Flipkart, Myntra, Amazon, everything else, right? So they are focusing a lot on this, and this is a good sign for any company which takes technology and then use it for the benefit of the company and its progress. Then if you see further, they have adding premium products. We discussed all these things before. They are moving from entry level to premium level products. So premium level products, same thing, margin expands, ASP expands, and eventually the company gets more money to create a better brand. Then if you see, they're leading make in India athleisure brand. So we don't have a single listed athleisure brand. They are the only listed company which are into segment of athleisure or sports and athleisure segment. So and if they play their all the cards right, they can 5 years down the line they can become a brand which we can be compare with Reebok or Adidas or Nike. I will not say we'll compare become same quality or not. Even Nike can become bad quality or Campus can become even better quality than Nike. But at least from brand perspective, we might recognize this as a formidable brand compared to Adidas and Nike. Some more strength we'll see, or rather some business drivers. First, innovative marketing capability. So since they are moving to premium segment, they have to do some good marketing, influential marketing, then digital marketing. They are trying to include all these things in their business program. Right? Then optimum capacity utilization we discussed already, and they are focusing on female category. Now, if you see their sales and everything, 84% sales was from male category, 16% were from females and kids. Now it become 80% from male, whereas 20% from kids and females. So they're focusing on the female category also. So that is a new market for them. So they already have market in the male category. Since female category will add up, this market also expands here. So these are three very important business drivers. What is there for the benefit of the company? Now, everything cannot be good about it, and there should be a possible risk in any company. Otherwise, it just become a one-sided commentary. Okay. So these are the few possible risks which I thought of myself. They have not. They will definitely not talk about risk in their concall letters and all. Not very encouragingly, right? But this is something which I see myself. Again, this is my personal opinion altogether. Okay. Bata and Liberty are a bigger brand. They are a much known brand compared to Campus. Campus we know it, but personally I think I might be completely wrong here. I think Bata and Liberty are bigger brands compared to Campus. So Bata and Liberty might add athleisure brands in their own product. Okay, athleisure products in their own brand. So Bata has many brands like Hush Puppy and etc. So Bata can launch an athleisure brand, or they might have also a athleisure brand where they'll start marketing more. So that will hurt the sentiment of this company because they also are Bata and Liberty also are making India brand. Bata is not an Indian brand, but it looks like it has become so old that people think it's an Indian brand. Then other problem is that EBOs doesn't perform well. EBOs are not a profitable business in many senses. Most of the EBOs are in loss-making business, but still, if your EBO doesn't perform well, the branding doesn't work out for you. EBOs can be highly loss-making business, both in terms of branding and both in terms of money. Third risk is they're not able to capture market share in a premium segment from bigger brands. So bigger brands, Reebok is not a bigger brand right now. It's a kind of failure. But Adidas, Nike, Puma, Skechers, these are bigger brands. So taking market share out of it becomes difficult because people still don't associate Campus with bigger, with a more athleisure kind of brand. The time they still have to travel a lot where they can become an alternative to Puma, they can be alternative to Adidas. So that time is still there. But if they can go in that extent, it's well and good. But if they fail there, maybe their aspirations to become a premium product or premium sports wear might fail across. So this is something which you need to look out for. Probably quarter on quarter, their concall letters annual report will give us a clear picture where they have placed right now, how much product they are selling from the premium segment, how much product they are selling from the entry level segment, how many products they are selling from the mid premium segment. This is something which we need to note. These are the three key features. Also, key risk. Also, I'll tell you to go and focus on Bata and Liberty also, because we need to know what they are doing. Then only we'll know whether there is a competition or not. Okay. So these were my analysis. This is my understanding on the entire campus activewear sector. So if you think this video is helpful, do like the video, do share with your friends and family. And also, if you think that I should create more videos like this, do give a feedback in the comment section. Thank you so much for watching. Stay happy, stay safe.